Ladies and gentlemen.
Welcome to the Blockcrunch podcast, the go-to podcast for investors and builders in crypto. And before we get started, just a reminder for you guys out there, the Blockcrunch podcast is intended for informational purposes only. Neither the host nor its guests are licensed financial advisors, and nothing discussed should be construed as financial advice. Views held by Blockcrunch's guests are their own, and sponsorship messages do not constitute financial advice or endorsement. With that out of the way, let's jump right in. Today's episode is brought to you by Protocol Labs, the team behind Filecoin. And with me today is Colin Efren from Protocol Labs, who leads ecosystem there, to tell us why people should choose Filecoin over alternatives. So, Colin, why should people be using Filecoin over other competitors?
Filecoin believes that Web3 will only win by offering a better product at a better price point. When it comes to storage, Filecoin offers the most scale at the cheapest price with the strong guarantees, uniquely enabled by its open market of storage providers and its crypto economic incentives. Now, smart contracts on Filecoin, which launches in Q1 of 2023, only make this more powerful. It enables users to create perpetual storage deals to store data forever at costs that are a small fraction of centralized storage providers like S3.
Hello there. Now, before we move on, I'd love to thank the hundreds of you who have subscribed to Blockcrunch VIP, because with your support, I've been able to share my real thoughts on specific projects that I don't usually share on interviews in a format that I enjoy more, which is bi-weekly written posts. We've also been able to offer exclusive AMAs, sharing my investment frameworks, interactable models, and breaking down important trends before they become big. Now, we even had Elon Musk comment on one of our threads recently. So if you haven't already, head on over to theblockcrunch.com/VIP, and you can access dozens of hours of research for what you'd spend on a coffee a day. All right, hey everybody, welcome back to another episode of the Blockcrunch podcast. I'm here in sunny New York, and recently there has been a large uptick in activity on Arbitrum, a scaling solution on Ethereum that leverages optimistic rollups. Now, specifically, Arbitrum One, which is the flagship rollup, is now the number one layer 2 in terms of total value locked, owning almost 50%, actually more than 50% of the entire market, and they have over 2 million active accounts, according to Dune. Now, it's now home to popular applications like the DEX GMX and also the GameFi project Treasure DAO, known by the ticker symbol Magic, which we had on the show recently. Now, as recently as September of last year as well, OpenSea also announced support for Arbitrum NFTs. So suffice to say, a lot is happening, and many of you actually reached out in the past 2 weeks, intrigued to learn more about Arbitrum. So once again, I'm really excited to have AJ from Offchain Labs come on the show for a second time since his first appearance a year ago to talk about the many, many things that happened on Arbitrum and break down the latest happenings in the scaling arena. So welcome back to the show, AJ.
Thanks so much for having me, Jason. Looking forward to doing this again with you.
Yeah, and I remember when we first did our first episode, Arbitrum was first starting out, and, rollups weren't really the agreed upon default for Ethereum scaling yet. ZK rollups and EVMs weren't really a thing beyond maybe research conversation. So how has the landscape and dialogue around scaling changed now versus when you guys first started?
Yeah, it's a good question. So I think, what happened was in the let's just call it the 2021 bull market, there was a lot of opportunity in alternative layer 1 environments, a lot of token issuances, distributions, significant grant programs that were being disseminated to teams to build in alternative environments. And if you combine that sort of with the state of rollups, it was like, a flurry of activity happening outside of Ethereum. Ethereum base layer was extremely expensive because it was the bull market. People don't remember it now because we've been in a bear market for about, let's say, a year. But if you wanted to do a Uniswap trade, it was like $40 for like very long amount of time, right? And that's obviously not an environment in which you can scale to significant users. The value of the transaction has to be pretty meaningful in order for you to incur a $40 transaction cost. So it completely made sense that people were looking externally outside of Ethereum, both to alternative EVM chains, as well as chains like Solana that utilize Rust. But as rollups have matured, as Arbitrum in particular has matured, as the throughput has increased and the costs have gone down, I think we've seen a little bit of a return. I think that's also probably combined with the market sentiment, where some of the benefits of leaving the Ethereum ecosystem are probably not as high as they used to be from like a grants perspective, et cetera. And we're really seeing a lot of folks, really believing in the Ethereum as the moat, EVM as the moat, and excited about the Rollup centric roadmap that Ethereum has. Arbitrum in particular, since our last call, doing this together, has had significant growth. From a throughput perspective, it can do about 10x capacity before it hits any congestion. So, we have all of this market volatility, or, whether it's around macro or, crypto related news. And Arbitrum, has basically not been in congestion yet. As we continue to get more and more usage, obviously a congestion mechanism ultimately kicks in, but it's about 10x the amount of Ethereum. And even since we've spoke, the cost of using Arbitrum has fallen over 70%. We've taken advantage of advanced compression algorithms using what we call our Nitro stack, which went live in August this past year. And you combine those things, there's just a lot of really exciting reasons for people who want to be building within the Ethereum ecosystem again. And it's been cool to see. I think, we see a lot of rollups are starting to come live. Obviously, the ZK rollups are pushing closer and closer. We've been saying that for a long time as a community, but it looks like we're finally turned a corner with Polygon's recent announcement. So I think people are focused on building on top of Ethereum. We can talk a little bit about the advantages of it, but it's just much easier from a community perspective. People really believe in this roadmap. It's allowed us to attract a lot of liquidity from people who believe in Ethereum into the network, which has allowed many applications to flourish.
Yeah, definitely. And just to put it in concrete terms as well, like how cheap is it for users to use Arbitrum One, which is a flagship rollup today, compared to like Ethereum?
Yeah, so it depends on a couple of things. And the majority of the cost of using Arbitrum One, and this is going to be true for all rollups, is how expensive is it for you to post your data to Ethereum, right? So there's two, we call it like we have two-dimensional gas. There's layer 2 resources, so just like, how much bandwidth are you taking on the network? And then there's the call data cost, which is how much data are we required to post to Ethereum for your transaction to be, recorded there. That's the majority of the cost. So right now, and any rollup has to post this call data. If you wanted to do like a swap, it's about 20 cents. An ETH transaction would be about a little bit less than 10 cents. Right now, Ethereum, I'm just looking at a gas map, it would be about $7 to use to do a swap and about $1.50 to send a transaction. So depending on the use case, it's somewhere between 10 and 100 times cheaper. The things that are take the most advantage of rollup technology are advanced DeFi applications like GMX, which take up a ton of computation and only post very low call data to Ethereum. So their transactions are probably about 100 times cheaper using Arbitrum than they would be on Ethereum because there isn't that much call data that gets posted. You probably remember that's, Synthetics was probably one of the earliest, communities to want to be making the move to L2. And that was because, gas on L1, because of the nature of the product, was one of the biggest blockers, even in comparison to things like, Aave or Uniswap, which are much less computationally intensive.
And this is more of a general question, but I'm curious, for Arbitrum, is the goal to get transaction costs for any type of application as low as possible? And if so, how low is low enough? Because as you mentioned, like 20 cents, it might be very cheap for DeFi users, but once you start building applications for like emerging markets, they might have a different price point as well. So how do you think about just how cheap should we make the transaction fees?
Our mandate is to continue to solve scale without compromise. That's how we think about it. Providing best-in-class scaling solutions for the use case that exists. And the fundamental core cost right now of using a rollup is posting Ethereum call data to layer 1. But that's not a problem that has to necessarily exist. So for example, the Arbitrum and Ethereum communities and other layer 2 technologies, we're all focused on, for example, EIP 4844, which is going to make posting call data to Ethereum for rollups even cheaper. My colleagues who are part of the Prism team are working on this, together with the Ethereum core devs, and the EIP 4844 will bring down the costs of posting call data to Ethereum for rollups significantly. But it's actually maybe a good segue into talking about Nova for a minute, because that was one of the reasons why we launched the Nova chain. It became very clear to us. So, I'll take a step back for a second. When you go to the Arbitrum sort of, let's say, go-to-market strategy, it was very DeFi focused first. And the reason for that was when we launched in August 2021, it was still in the bull market. Ethereum was expensive. So an Arbitrum transaction was expensive. But, a swap on Arbitrum then was probably between $2 and $3. And, again, it was because, posting call data to Ethereum in the bull market was extremely expensive. And it became very clear to us that, social projects, gaming projects, low value NFTs, this was still not the correct product at that environment, at that price point for them to succeed. So we actually didn't really focus on use cases outside of DeFi for quite a fair amount of time. Treasure DAO had launched, if you remember correctly at the time, there's a lot of high value NFTs like the Legions and the Small Brains, but their games had not yet come live. So we really thought about how do we make sure that every use case can take advantage of the technology stack that we have, and the Nova chain was designed for that in particular. Because I'll give you a little bit of a background about Nova. Nova and Arbitrum One share the exact same code base. There's only one distinction between the two projects, between the two platforms. Do they post call data to Ethereum? Or they post call data to a data availability committee, which is making guarantees that the data will be available. And because if as I said, the most expensive part is posting the data, we can have the Nova chain have costs about 90% cheaper than Arbitrum One. So if you do an ETH transaction on Ethereum, on Nova, it'll be sub-penny right now. And the reason for that was because we think that chain and the technical design of that chain, and I'm happy to discuss it further, is it's technically superior to a side chain. It has a lot of the functionality that you'd want in a rollup environment, and it has the ability to fall back into a rollup to continue progress if necessary. And it's just a better platform. So really, only once the Nova chain launched have we started focusing on other verticals, because our belief is, and again, if we have a project, with DeFi projects like, GMX, Sushi, Uni, we haven't told them, actually Sushi's on Nova to serve their AMM, but we haven't told the DeFi projects move to Arbitrum Nova because it's cheaper, right? We fundamentally believe that, every application has to make a trade-off in some capacity between security and throughput and decentralization and security. For DeFi protocols, what we've seen is that, it's fine, to pay what's happening, the prices on Arbitrum One. But if, for example, like you mentioned, an emerging markets focused platform wanted to launch, I'd probably recommend them to launch on Nova. Basically every game we advocate, you should launch on Nova. Today the gas fees on Arbitrum One might be low enough for your game to survive. But, if we get into another bull market, or, like the Blur team had done an airdrop, your game can become, functionally difficult to operate, especially because in the gaming vertical, we see more teams abstracting gas fees from their users. So it requires how do I model, this, right? Because if my user is not going to actually be paying for gas, I have to have some confidence in, in the volatility of what I will be paying on their behalf and what I charge to users in different capacities. And because Nova doesn't post call data to Ethereum, it doesn't have those gas spikes. So it's really, a chain that's designed for those verticals. I mean, that's what we think about it. We think that, there's no one technical solution that will be perfect for every application. And we try and provide solutions that will benefit both. So for example, OpenSea is live on both chains, right? So, one of the things, and that actually only happened last month. So, one of the challenges that we've had is, especially because gas on Ethereum is low, the trade-off has been, I want to launch a game on Arbitrum. Do I, take all the infrastructure that exists on Arbitrum One and sacrifice and pay a little bit more in gas fees? Or do I move to Nova, which, might be a technical architecture that's better, but doesn't have all the infrastructure? So we're focused on making that infrastructure available on both chains. And OpenSea going live was, a critical add for, and Treasure, actually, they've added Trove marketplace support for both chains as well, which is a critical component for for projects that are focused on gaming, for example.
And given that you guys built Nova, which is this alternative that doesn't post call data to Ethereum, as you mentioned, is there any compromises that Nova makes in order to have this lower cost? And is that the kind of, I guess, more centralized committee compared to Ethereum?
Yeah, so that is the trade-off, right? So Ethereum on a rollup, Ethereum has your call data, so you can always adjudicate your call data with Ethereum. On Nova, your call data is posted to a data availability committee. So the trust assumption you have is that one member of that committee will be holding your data for you. That's right. And any one of the validator members of the committee has the ability, if they sense that something malicious is happening, can force the protocol into a rollup until the system adjudicates itself. So, picking that committee was pretty critical for us. And again, the trust assumption is you have to trust that one member of that committee will hold your data. So when we built it out, we tried to get a pretty wide and robust set of community actors that, regardless of who you are, you should be able to have confidence and trust like one member of that committee. So the committee today is Offchain Labs, Google Cloud, Reddit, Consensus, QuickNode, P2P, the team, sort of that works on a lot of the validator stuff, OpenSea. I might be forgetting one or two, but if you think about that list, obviously it's a ton of significant actors within the ecosystem, both in the Web 2 and the Web 3 worlds, and again, you have to trust one of them, right? So we're not saying that it's as secure as a rollup, and that's why we don't advocate for all of the projects to move, especially on the DeFi side. But for certain use cases, like this is kind of necessary, and the ability to say that you only have to trust one member versus, let's say, a typical sidechain where you can have a cartel of members, form, and you can lose the supermajority honesty assumption pretty easily. This is, we think it's just a much better technical design from a security perspective. The cool thing about Nova and the use of a data availability committee is that if you add people to the committee, it's only additive. And what I mean by that is, let's say I add 100 folks to the validators, to the data availability committee, and the validators of the ecosystem. As long as there's still the one person you trust, their role in the ecosystem has not been diminished. In a sidechain, though, if you want to go from, let's say, a set of 20 validators to 200 validators, what you need to confirm is that the 180 validators that you're adding are actually sufficiently decentralized that they will not form a cartel. So one of the biggest advantages is that you don't have that concern on a Nova or data availability like architecture. And that's one of the big, I think, technical innovations of the stack.
Got it. And just to double click on that, so if there's a situation where these validators are like coerced by, I don't know, like government entities to censor transaction or so on, what happens to Nova? Like, is there a kind of backstop?
Yeah, any one validator has the ability to force it into a rollup. And then what happens is the committee starts posting the call data to Ethereum and will operate. The costs will go up, the progress will continue, and it will operate exactly like Arbitrum One.
Got it. And I'm also curious about the kind of zooming out a little bit, given that you mentioned that there could be constraints if there are many applications like Blur launching their tokens, for instance, on Arbitrum One. Is it logical to think that there will be many rollups in the future, maybe like even sector-specific rollups, so that DeFi applications don't end up fighting for the same block space as like NFT drops and so on?
Yeah, it's a good question. So when I was talking about Blur, I was talking about the fact that Blur dropped on L1, which caused L1 prices to increase. But fundamentally, you could have congestion on layer 2 as well. And you see this on some side chains that have a ton of traffic and have low fees. So how do I see this playing out? The way I really see it playing out is, first of all, on the public chains, we're going to continue to try and have as much throughput as we possibly can. Right. So we've already had like a 10x improvement. We can talk a little bit about Stylus. That is a technical upgrade we announced last week, which should see further improvements in efficiencies. There will always be a possibility that a specific application, whether it's in a specific time, or will grow big enough that it will dominate the share of the market. I see a couple of things happening, and I think that some of our competitors are probably more focused on it today than we are. Is there will be two things happening. There will probably be multiple public roll-up environments, right, where it's really for applications that cannot be on their own environment in order to succeed. It's unnecessary for them to be on the same environment as like an NFT if they're a DeFi project. So, I don't think we're there today because I think the scale and demand is still not there for like multiple implementations. But I think the other component is there will be applications that are successful enough that don't have many dependencies that will move to their own application-specific environments. I think it's much more likely that we see this in the gaming environment before anything else, or like specific enterprise use cases. that are, let's say, focused much less on composability, and ecosystem and liquidity and shared liquidity. But that's probably what's going to happen. I think we're seeing even in the alternative layer one and sidechain environments, like something like subnets and supernets are definitely things that people are investigating. I think that it's still a little bit early, just from what I've seen in terms of like the organic demand for that much, block space. I don't think block space right now is like the key blocker to growth within the ecosystem as an industry as a whole. I think, we're still looking for, more like solid applications that can continue to appeal to mass users. But that's how I see it playing out. And of course, a lot of other rollup projects are launching rollups as well. And we share Ethereum layer one space, but we don't share Ethereum layer two space, right? So, I think there's probably 20 rollup products that are live today, and each of them have, their own execution environments with, significant block space.
And speaking of solid applications, obviously one of the big partnerships that you guys did for Nova was with Reddit and their social tokens. Can you talk a little bit about how did that happen, and why did Reddit pick Arbitrum over other chains?
Yeah, that was exciting. That's going back a very long time already. So in July 2020, Reddit had put out like a request for proposals from different scaling solutions that they wanted to basically bring their community points on chain, and it was probably about a year and a half of diligence before they announced that they're going to be using Arbitrum. They were on testnet for a while. And then when we launched the Nova chain, they migrated that day the two communities that are part of this pilot project to the main chain of Arbitrum, the cryptocurrency subreddit and the BRICS Fortnite subreddit. It's been a very interesting project. It's pretty cool, sort of the vision of what they're trying to do. It'll be, I'm excited to see kind of where it goes, but the cryptocurrency community, the Moon token, has been doing really cool things. So, for example, they had like that Reddit like mural thing. I forgot what it's called. That it happens like Reddit Place, maybe like a different subreddit where you can like design a mural, 10,000 different squares. They did it with like an NFT where you have to like burn the Moon tokens, and you got these NFTs, and like they're designing like these murals. It's like super cool to see. They've been selling ad space on like the subreddit to different cryptocurrency projects. I saw like CoinGecko and 1inch are already advertising, and you have to like buy moons and burn them, and it goes like the communities. It's like very cool. It's extremely early, but it's super cool to see like how these like social communities can actually leverage blockchain technology to build out. So it's still in very early stages in terms of the scale, I think, of what they're trying to do, but it's been really exciting to see some of the early experiences happening within like the cryptocurrency subreddit.
And that's actually, it brings up a really interesting point, because I was very curious why you guys decided to choose kind of social as the positioning or the go-to market for Nova. Why not DeFi, gaming or NFT art, some of the things that maybe crypto Twitter seems to be more familiar with, because social still seems like quite early to most people.
Yeah, so we actually branded it as like social and gaming. And the way to think about it is, we fundamentally believe, that we were trying to solve, like I said, solve scale without compromise. And, rollup technology is still the most, secure technology. And we are not trying to pull people away, right? It's a very uncomfortable tension where you're trying to grow an environment that is super cheap, right? Cheaper than your other product. But you, from a philosophical perspective, believe that not everyone should be on the cheapest product, right? And for GMX, for example, like the fact that people pay 20 cents in gas fees, it doesn't really matter, right? The size of the trades that their users are doing, the liquidity that they can tap into that exists on the rollup, right? There's almost 900,000 ETH that lives on Arbitrum One in the bridge today, and that liquidity is not on Nova, and it's not designed. Like, those are not like the KPIs for what Nova is trying to solve for. And obviously, liquidity is important, but Arbitrum One is going to be the hub of liquidity, the hub of on ramping, for liquidity. Because it's a roll-up, and that's like the vision that we have. And social and gaming use cases have a very difficult time to survive in, like I said earlier, the L1 gas volatility and just generally the higher prices. And Nova is a much better solution. So, for example, things like fine art, right, which don't have a ton of trading volume, but are more focused on, like, let's say, price per piece, right, or inclusivity and liquidity. They probably don't have as much sensitivity to the gas fees, right? So things that are high throughput or, in-game assets that, you might sell for $1 because you're not interested in the asset, you don't want to have a 30-cent transaction fee if it's going to be $1, right? So having those fees as low as possible is what leverages, the Nova infrastructure allows. And we're pretty, as a team at Offchain Labs, we try and be pretty helpful to projects to understand sort of their on-chain footprint and see which project, which product, which solution would actually make more sense for them.
That's one thing that I thought that was really interesting about the Arbitrum team is that you guys are very iterative with your approach, right? You guys are shipping products after listening to feedback from developers or from projects versus I think a lot of projects that we see out in the market, they basically just have one vision of the world. It's got to be this, they ship it, and they kind of expect users to come. So can you talk to us a little bit about the process? Like how do you guys decide, okay, which project should we be talking to? Like how do we incorporate that feedback? And how often do you kind of reset or maybe iterate on the technical roadmap for the entire ecosystem?
It's a great question. I think internally, it's actually we obviously have like feedback loops of projects building. I think one of the things that we're fortunate with sort of a lot of the adoption that we've had is we're getting a ton of feedback from teams like, this is what we're used to on Ethereum, like this deviation from like, block timestamps or something, is really, hurting the ecosystem. So we get a ton of feedback because of the number of developers that are building on things they like and they don't like. We're also, I think, pretty open-minded to the technology. And I think that is one of the most important, I would say, like philosophical components of our team. Like, when we launched Arbitrum, the classic stack, like we call it, the original version in August 2021, I think 6 days later was the first commit to the Nitro code base, right? So, the team did not rest on its laurels and say, okay, we got this, we're done. We knew the limitations of that tech stack. We knew where we wanted to go. And it just was, about resource bandwidth and like, trade-offs between like how much do we delay going to market with a product versus, shipping. And we've always had that kind of approach. So, I'll plug Stylus, for example, and I'll explain a little to your users what it is. Right now, Arbitrum is, EVM equivalent, fully EVM compatible, whatever the term you like to use is, with a Nitro code base. It's been a real treat for developers to be able to. There's like very, very few changes, and we have a list of like the 6 changes that they're really like L2 to L1 type of differences, more so than any changes to the EVM. But we do believe fundamentally that the EVM should be the floor, not the ceiling. And, we've always kind of appreciated that. It's been on our roadmap for years. And we finally announced, but I think last week, the Stylus announcement, which I think is super cool and super exciting, is that you'll be able to use more than EVM-based languages, so like Solidity and Viper, within the Arbitrum ecosystem. So within the same rollup, like on Arbitrum One, we're starting with Rust and C++. You'll be able to deploy contracts that are written in Rust to Arbitrum, and they can interact with Uniswap contracts written in Solidity synchronously, the same way that any contract exists on a blockchain. Historically, if you wanted to, write in Rust, you had to go to something like Solana. And there's trade-offs to, using the Solana from, let's say, a community and liquidity perspective versus, being within the Ethereum ecosystem. And we're trying to solve problems like that. So we're always, as a team, looking at what are the limitations, developers see within this tech stack, what can we improve on, and try and find the solutions. Solving scale is more than just throughput and fees. It's also the developer experience. If we want to have a billion people writing code on top of Ethereum, we're going to need them to have the ability to use more languages than just the EVM. And we've seen feedback. Like a ton of developers loved building in Rust and Solana, and we internalized that feedback, and we said, how can we build the Arbitrum architecture to allow more flexibility to developers? So we're starting with those 2 languages, and we're going to continue to add languages. Basically, the principles, anything that can compile to the WASM will be able to be added.
God, and I'd love to take this moment to talk about the kind of wider landscape for rollups as well, because obviously currently the main project that people compare Arbitrum to is Optimism. And I think you guys used to be differentiated by technical design, namely how the proofs are generated. But what I thought was really interesting is that Optimism actually pivoted from the original model and adopted you guys' design, which is this interactive proofs. So we don't have to dive into the technicals of how that actually works, but I'm just curious, what do you think will separate one rollup provider from the next in the future, especially if the tech stack has become a little bit more similar than before?
Yeah, it's a good question. So I think that there will be some divergences over time, right? Like I think there's, even with the ZK tech stacks, for example, right? Optimism, ZK, Arbitrum, we're all kind of appreciating the importance of like EVM compatibility, EVM equivalence, right? That's been something that even in the Arbitrum initial stack, where we never had a custom compiler, like we digested that very quickly, and everybody's really been digesting the importance of that over time. So that's something that like is everybody's converging to. But the what the playground looks like moving forward, I think, will be different. So, for example, the Stylus upgrade that I discussed earlier, like that is because of Arbitrum's WASM architecture. And I'm not an engineer, so I'm not the last one to dive into the details. Rachel on our team is like the queen of this. So I think she's actually going to be doing a Twitch stream probably in a couple of weeks talking about it. Yeah, but that's like very Arbitrum specific, because ZK Tech cannot just add those languages because of the way the prover is designed. It's a lot of technical work, and Optimism is using MIPS, so they have different limitations and different things that they're optimizing for in that, right? So I think what happened is that we've kind of converged on the floor of like what might be necessary in order to have ecosystem growth and adoption, and then you'll start seeing a lot of differences and different changes. You'll start seeing is like different designs, like the modular architecture, right? So Arbitrum is using a data availability committee with the Nova, for example. Different folks might have different approaches to how malleable the stack is to allow for different architectures to interact with the core Rollup protocol. So I think that what's happened is there's been a convergence to the floor, and there's going to be a divergence moving forward once everyone sort of reaches that floor. I would say that floor being like EVM compatibility right now.
Got it. And for the last part of the interview, I'd love to really zoom out and talk about three things. So number one is a term you just mentioned, which is modular blockchains. We actually just wrote a memo for our subscribers for a newsletter about value accrual and modular blockchains. And I think the conclusion is nobody knows for now. But I'm curious, in terms of where value accrues, right? Given that the very idea of a blockchain might be challenged under this new paradigm known as modular blockchains, you're separating the execution layer, the settlement layer, and then the data availability layer. How will value flow through all these different layers? Like, is Arbitrum going to capture all of the value at the execution layer? Is something like Celestia going to capture all the value at the data availability layer? Or is it Ethereum at the settlement layer that's capturing all the value?
I think it's a really good question. I'm going to have the same conclusion that you had in your mind. Nobody really knows. But I think a very helpful way to contextualize this is, Ethereum actually has incredible fees right now, right? Like, it's doing, I think, north of $5 million a day in fees over the last 30 days. So that's actually like, as a business is incredible. I think that for, the ecosystem as a whole, like this is all still incredibly small, right? Like the total addressable market of where we all think this is going, from like finance, sovereignty within gaming verticals, etc. We should be very open-minded to like things changing very quickly, right? And you can see like, modular blockchain wasn't really a conversation until about 6 to 12 months ago. Supernets, subnets, application-specific rollups, layer 3s wasn't really a conversation until about 12 months ago. And narratives change, business models change, economics will change. I think you're going to have different products just price themselves differently and have different economic models. I think some projects will be focused on value accrual, like at the data availability layer, right? Like for example, with us, when we think about Arbitrum One versus Arbitrum Nova, like we have right now like a shared economics model with Nova, but we're constantly challenged. Like, what does this look like? How do we make sure that that this makes sense between being shared between the sequencer, the ecosystem, and the data availability committee? The thing that I would say it will really all converge to when it becomes more relevant to answer these questions is sustainability, right? I don't think right now, because a lot of, and you see this especially with like validator rewards and like layer one blockchains, right? Outside of Ethereum, there's a lot of subsidies right now within the ecosystem from, like, let's say, validator inflation rewards, etc. That you don't have to answer these questions yet, but obviously those things cannot be sustained in perpetuity at the size that they are today. So I think that there will probably be a convergence to focusing on sustainability and understanding like what each component in a blockchain needs in order to sustain. And I think that's probably how the economics will flow to making sure that each component can be sustainable. I know that's like a half-ass answer, but I think it's the best that I can do. I think we'll have a convergence to like a sustainability plus model over time as, as rewards play a less significant role in economics.
Yeah, I think that makes a lot of sense as well. And with sustainability, obviously, we need more adoption first. So I'm really excited to see kind of more of the use cases and applications that people haven't even thought of come live.
Yeah.
And the second part of my this final part of the interview is about decentralization, because many people are quick to note that the current iteration of Arbitrum has some degree of centralization as far as the validators are concerned, because they're permissioned. I've noticed that the validator set is expanding, so the decentralization is definitely increasing. But how soon can we see things like permissionless validator set and decentralized sequencers? What needs to happen for those things to happen?
On the validator set, it is currently permissioned. There is a very wide set. I think we've published a list of some of the validators that are external. There's a whole bunch more that are also running validators that sort of didn't want to have be in the public light, both within like Web 2, Web 3 ecosystems. We're very close to going to permissionless validation. We published an article about a specific problem that we're in the Rollup protocol that we're trying to solve around delays. We have this technical solution; it just has to be implemented. So we're very close to having permissionless validation go live. The thing to be said here is, if you're interested in running a validator for Arbitrum One, like, please feel free to reach out. We're continuing to onboard. Yesterday a major European institution reached out that they wanted to run Arbitrum validators, and we're in the process of getting onboarded. So the whitelist is designed to understand who's running validators today and is not intended to be limited in scope. Permissionless validation is the ultimate goal, and we're getting closer by the day, and hopefully within the next couple of months it'll be done. I want to clear up some misconception about the sequencer. The sequencer's role is very limited in terms of what it can do. It has the ability to order transactions, and it could extract MEV if it does that, which is obviously not good. We're running the sequencer currently. We're not extracting MEV. If we did, we'd probably be hurting ourselves more than helping ourselves in terms of confidence in the system. But obviously, over time, the goal is to have not trust verify, but the system is designed that it cannot permanently censor, right? So you can get around the sequencer if you want to post a transaction to Ethereum. It cannot block your transactions. And also, one thing that people don't realize, it doesn't have the ability to determine how much you pay for a transaction, because the sequencer consumes that from Ethereum layer 1's gas oracle, basically, right? So the role of the sequencer is extremely limited in terms of what it can autonomously do within the ecosystem. But that being said, it would be great to decentralize. We're looking at a bunch of different ways, mainly around fair ordering. So how do we have a committee of sequencers determine what the proper order of transactions should be? I would say, probably will happen after the permissionless validation, but definitely something that our team is looking at.
Got it. That's definitely very helpful to clear up for our listeners as well. And this last question is also asked by a lot of listeners, and I think we actually discussed this in the last interview as well. So I'm curious whether there's been any changes there. But what I thought is unique about Arbitrum is that your stance has always been that you're agnostic to technology. You basically want to scale Ethereum, and you guys are the only project where you don't have the name of the technology in your name. So like Optimism, optimistic rollups, ZK Sings with like ZK rollups and so on. So you guys really embrace that tech agnostic approach, and you have mentioned many times in the past that ZK is also part of the roadmap. So I'm curious, like, what do you need to see before you decide to pivot to say, hey, let's do the ZK thing now?
I'm not going to completely do this justice because there's people much more technical on our team that will give you more technical answers, but I'll give you the high level. The things that ZK solve for that people are most excited about is a 7-day withdrawal period. And the 7-day withdrawal period is about messages between Arbitrum and Ethereum. In many ways, that's becoming less and less relevant because when most users want to exit Arbitrum, first of all, there really is no meaningful reason like you have to exit Arbitrum unless you're buying an NFT on a different chain, or you're playing a game on a different chain. But for example, within the DeFi vertical, like I don't know if you use how often you use Arbitrum, but basically everything is there. Within the DeFi space. So when people want to leave Arbitrum, they're going to Polygon, they're going to Optimism, they're going to Starknet, right? And if you're moving between these different chains, the 7-day withdrawal is irrelevant, right? Because everyone is using a third-party bridge to go cross-chain in a way that is irrelevant between, whether it's ZK rollup or optimistic rollup. So what we're seeing is less and less people are actually going back to Ethereum. And if they do so, there's all these liquidity bridges for fungible assets that makes it easier anyways. But definitely, so the problem that, like, the main problem of optimistic rollup versus ZK rollup, like, diminishes every day. So what are the limitations that we've seen in off-chain in ZK rollups? So I think some of it is around prover costs, right? We want to see how does a prover operate in an environment that's at the floor EVM equivalent, but has the ability to function and do much more, but also like the flexibility within the tech stack. It's much easier for us in an optimistic rollup environment to say, let's add programming languages. Let's have the flexibility to add Rust, right? Because we don't have to prove using a ZK prover. We don't have to write a prover that can prove contracts that are written in Rust, right? So there's flexibility, and this is what I say, that like scaling is more than just throughput and fees. It's the environment as well, and compromising on that flexibility it's just much easier in an optimistic environment. So if we see advances in the prover and the ability to have much more flexibility in terms of what it can prove, and the costs go down, the more complexity that's introduced, is definitely something that we would look at. Like you mentioned, we're not against ZK technology. Our goal is just to solve scale, and there's trade-offs, when you use that. When you use a ZK prover, there's questions around like the decentralization of the prover, the ability for anyone to be able to run a prover, what that means. So I'm not going to comment on that as much because I'm not up to date in terms of how that's going for different projects. But it's very easy for people to run nodes in Arbitrum ecosystem. It's just a Geth node. It's easy for people to have the transparency to understand what is the sequencer doing, running a validator. And we just think that, optimistic rollup technology today is the best technology. People like to compare what ZK rollups might look like in 2 years versus what an optimistic rollup looks like today. But the reality is, if you look at the innovation that we've seen in the last 18 months on Arbitrum, in 18 months from now, Arbitrum will look, completely different than it does today. And, understanding where it goes is part of the strategy. So making sure that you can maintain the flexibility and not have limitations potentially of proving costs or, prover flexibility, it has allowed us to be much more flexible.
Yeah, and I think that's a great note to end this on. And I always thought that, reading the Arbitrum blog is like a lot of hidden alpha there, because there's a lot of narratives being pushed out there for different, scaling solutions. But then for Arbitrum, I think you guys always take a very measured approach into kind of what actually works today and what is needed today. So I always thought, okay, it's actually a great way to understand just exactly what is happening in scaling just by reading you guys' blog. Yeah, but once again, thank you so much for coming on for a second time. I'm really, really excited for when we do this a third time. I'm sure by then a lot of things would have changed as well. So thanks for coming on again.
Yeah, of course. Let's do it. We didn't talk about the ecosystem so much. I'm just going to give a quick shout out and thanks to all the builders building on Arbitrum. We really appreciate both the builders and the users. It's, the technology is worthless if there's people not excited about it and using it. So I just want to give a thanks to everyone for all the support.
Yeah, absolutely. And actually, speaking of that, for people who want to check out one of the bigger projects on Arbitrum, we did an episode with Treasure DAO. We also did a memo for it for Blockcrunch VIP, so you can check that out in the show notes below. And thanks for coming again, AJ.
Thanks so much.
All right, that's it for this week's episode of the Blockcrunch podcast. So thank you so much for tuning in. If you enjoyed this episode, please make sure to subscribe on your favorite apps. And in case you didn't know, this interview is also available as a video on YouTube. And if you tag the Blockcrunch on Twitter this week and tell us what you liked about this episode, I'll be sure to respond to you as well. Now, if you'd like to go even deeper, we have a VIP tier where every week or so, we write an in-depth research brief or investment memo on a project. And we'll have exclusive AMAs with myself where I answer all your questions as well. Now, we already have analysts from some of the top funds and companies in crypto as subscribers. So if you're serious about getting an edge in crypto, head on over to theblockcrunch.com/VIP to learn more. And once again, thanks for supporting the show, and I'll see you next week.